Hello everyone, welcome to Officers Adda 247 class. So hearty welcome to all the bankers in this early morning session. So as you know that only 30 days left for the examination. So this is a time when you should just get up your preparation. Okay, so we are here for discussing the important MCQs that is related to module C. So if you're finding anything is important, just quickly note down that. Okay, so before to proceed further, I would like to say if you're new on the Officers Adda 247, just hit the subscribe button and just download the Adda 247 application so that you can get everything at a one place. Okay, and especially one update also from our side, that is our special batch is going to start, and this would be the fresh batch. Okay, that means you are going to get the quality content as well as the whatever the sessions we are going to take, that all will be based on the exam oriented. Okay, as well as you are going to get the 80 plus ebooks, 80 plus topic wise test series, topic wise full mock test, all things you are going to get, live classes as well as the recorded classes. Okay, so you only have to use a code that is Y422, and with this code you are going to get the big discount on the batches. Okay, so just hurry up because the fresh batch that is going to start from the 20th of May, and all classes that you are going to get, that all will be based on the exam oriented. Okay, so this is the last time when you should just just enroll in our batches. So let's start today's session with the very first question that related to your company account. Just try to solve this question, because based on that you may get the question in the examination also. Okay, just try to solve this question by your side first, after that I will just explain you this. Okay, so whenever we're talking about like the any applicant, okay, if we are just going to say, if applicant for the 1 lakh shares were allotted 50,000 shares on a pro rata basis, so the shareholders who was allotted 500 shares must have applied for how many shares? That is the question. Okay, so what would be the answer of this question? Anybody can tell me what would be the answer of this question? When we talk about a pro rata basis, why we are just saying the pro rata basis? Okay, you can understand pro rata basis actually considered when we are talking about like the applicant actually applied for the 1 lakh shares, but they actually allotted with the 50,000 shares. That means you can understand there is a cases of the over subscription. Okay, that's why the company actually followed the pro rata basis formula, that you have to understand how to solve this. So you can understand whenever we're talking about the 1 lakh shares, for the 1 lakh shares actually the 50,000 shares only allotted. So the shareholder who actually allotted the 500 shares, so when we talk about the shareholder who actually allotted with the 500 shares, so how many shares that he had applied for, that you have to calculate. Now just tell me one thing here, if you're talking about this is a 1 lakh, this is a 50,000, then how much ratio this is? That is a 2 is to 1, right? That means for every 2 shares that is applied, the 1 share that is allotted. Just try to understand what I am saying. That I am saying that for every 2 shares applied, the 1 share is just allotted. So you can understand, if any person is allotted with the 500 shares, that means he actually applied for the 1,000 shares. So the correct answer of this question, that would be the 1,000 shares. That would be the correct answer of this question. Okay, so this is how you have to solve the questions as well as in the examination. I'm hoping that everyone just understood this, right? So now the second question, current assets are given, inventories are given, prepaid expenses are given, then liquid assets will be that you have to calculate. Okay, you have to understand whenever you are going to just get the term in the examination, liquid, that you have to understand it is nothing but the quick. Okay, suppose that the question is you have to find out the quick, you have to find out the liquid ratio, then you have to just understand, you have to find out the liquid quick ratio. Okay, so whenever you are just going to get this term, that is liquid, that means you have to understand it is all about the quick. Okay, now we have to just find out the liquid asset, right? That means we can say that we have to find out the quick assets, right? We have to find out the quick asset, right? So now how we can just find out that? When the current assets are given, inventories are given, prepaid expenses are given, a very important thing, just write down that whenever we're talking about the inventory, whenever we're talking about the prepaid expenses, that all considered as a current asset, but not the quick asset. Okay, and this is a very important thing. when we're talking about the current asset data is given to us like the 85,000 rupees that is given, okay, and the inventory that is given the 22,000 rupees. So that is a current asset but not the quick asset. So from this current asset you can understand the inventory value that is given the 22,000 rupees. So for getting the value of the quick asset, what we can do, we have to, because we know that all the current asset, all the current asset just not be equal to the quick asset, but all the quick asset that will be equal to the current asset. So now if I say, if I have to find out the quick asset here, so how we can just calculate the quick asset, that it would be equal to the current asset minus inventory, because we know the, and based on this you may get the multiple questions in the examination, and the multiple form of the questions also you may get in the examination, that inventory and the prepaid expenses are both related to your just current asset, not the quick asset. Okay, so what we have to do, we have to just deduct the inventory plus prepaid expenses, right, that we have to deduct. So now the value of the current asset that is given the 85,000 minus inventory value that is given the 22,000 plus prepaid expenses that is given of the 3,000. So what will be the value of the quick asset? Now just tell me what will be the value of this, that it would be the 60,000. Okay, so the correct answer of this, that would be the B, the 60,000 rupees. That should be the correct value of this. Okay, I'm hoping that everyone just understanding this now, how to calculate the quotients of the current ratio, quick as like the quick ratio, current ratio, quick asset, current asset. And you just have to understand from the ratio analysis chapter, minimum 10 to 12 marks you are going to get, minimum 10 to 12 marks. So you can understand how important the chapter is, because of multiple type of the question, like the theoretical question that may ask, like the numerical question that may be asked. Okay, so that means this chapter is a very important to understand. Okay, I'm hoping that by these questions you understood something, right? Now another question. In this question we have to find out the quick ratio. What will be the quick ratio? So now here it is given the data, a company's liquid asset. The very first thing that you have to understand, what is the formula for the quick ratio. Then what is the formula for the quick ratio? That is quick asset and it is divided by the current liability. Why it is not divided by the quick liability? You know, in accounting we actually assume the quick liability that is equal to the current liability in accounting. You know, we can see that whenever we're talking about the liabilities, we consider that, we assume that we have to just pay all the liability. There is no any kind of the thing that that in the liability case we're just going to consider the quick as well as the current. Okay, so that's why in the like in this case the quick ratio, we have to find out, we can understand the quick ratio formula, that is quick asset and it is divided by the current liability, right? Now if the liquid assets are given, so what we consider, what we know by the liquid asset, now what I explained to you in the previous question, that is liquid, that you have to understand as a quick asset. Okay, so when I'm talking about the company's liquid assets are given the 10 lakh rupees and its current liabilities are given, subsequently it purchased goods for the 1 lakh on the credit, quick ratio will be. So what we understand by the quick asset and what we understand by the current liability. Okay, so now you can understand the quick asset, the value actually given here, that is the 10 lakh rupees, and now it will be divided by the current liabilities which is given the 8 lakh rupees. But subsequently it purchased goods for the 1 lakh on the credit. Whenever we talking about, it is purchased on the credit from the seller. Okay, from the seller, we're talking about the company actually purchase the goods of the 1 lakh rupees from the seller. You can understand this is actually considered as a liability for this company, and now it would also be added in this. So this would become the, what, that would become the 9 lakh. So now what will be the quick ratio value? Then it would be equal to the 10 divided by the 9, or you can also say that 1.11 is to 1, or you can also say that 1.11 times. Okay, so that the correct answer of this, that would be the 1.11 is to 1. Okay, so this is how we actually solve the questions. Okay, right, next question. When shares issued are 10,000 but applied shares are 8,000, then it is a case of, You know what the question is, what the question is just trying to understand. When we're talking about when shares issued are 10,000 rupees, that means issued shares are the 10,000 rupees but applied shares are 8,000 rupees, then it is a case of what? Just tell me what would be the answer of this. Whenever we're talking about the a company, that a company actually issued the 10,000 rupees, a company actually issued the 10,000 shares, but actually applied shares are the 8,000, then what would be the answer of this? The correct answer of this, that is under subscription. Okay, because we know the pro rata when we applied, when we just call the over subscription, that means suppose a shares issued, or you can also understand the company actually issued the shares like the 10,000 but applied shares are the 15 or 20,000, then it would be the case of the over subscription. But when we talk about the issued shares are the 10,000 but applied shares are the 8,000, that means this is a case of the under subscription. Okay, so this is how we actually solve the questions. Okay, next question. The ratios are primarily measures of the earning capacity of the business. So when we talk about the ratios are primarily measures of the earning capacity of the business, so which ratio we are talking about, that the question. The answer of this, that is the profitability, and just write down that, because based on that definitely you may get the question in the examination, because from the ratio analysis chapter you may get the theoretical question as well as the numerical questions. Okay, so you have to understand when we're talking about the profitability ratio, you actually talk about the net profit ratio, you actually talk about the gross profit ratio. Okay, you actually talk about the gross profit ratio, and you actually talk about the capital employed ratio. Okay, so what we talking about, that is capital employed ratio, that you are going to understand in the profitability ratios. Okay, so when we talk about the profitability, that means you can understand the profitability ratios are actually the primarily measures of earning capacity of the business, then the correct answer of this, that would be the profitability. Okay, so measures the earning cap, and this is also very obvious to understand when we're talking about the earning capacity of the business, that means it is just defined by the profitability. Okay, so I'm hoping that everyone just understanding this, right? Now the next question, which of the following is the non-operating expense? Okay, just first try to understand what is the what we know the operating expense. Okay, and because if you know the operating expense, then definitely you can just conclude that what is a non-operating expense, right? So when we talk about the operating expense, you can understand like it is a kind of the expenses that is necessary for your running operations, right? Like the normal business operations, that means expenses that actually incurred for the normally the business operations. Okay, like you can understand the rent. Okay, rent, any kind of the selling expenses, any kind of the wages, salaries. Okay, so that is actually required for the company, right? So you can understand the expense. What we understand by the operating expense, that means you only have to understand operating expense, that means the expenses that is actually required for operating the business, or you can also understand the normally business operation, the expenses that is required for the normally business operations or day-to-day operations, that you can understand as an operating expense. That means that is the necessary expenses. Okay, without this you cannot just imagine like your company will grow. Okay, so operating expenses you can understand, like you can understand the rent, your expenses, your wages, that all just considered as operating expenses. Now when we talk about the loss on the sale of machinery, okay, so this is kind of the what kind of the expenses, this is a kind of the non-operating expenses. Okay, so this, I think this is understandable for you, for everyone, that which of the following would be considered as a non-operating expenses, right? So the correct answer of this, that would be the loss on the sale of the machinery, that would be the correct answer of this question, right? Next question. The two basic measures of the liquidity are. Now, what would be the ratio? What would be the answer of this? The two basic measures of the liquidity. Okay. So, liquidity, when we talk about the liquidity, what we understand by that? Liquidity, you can understand that how quickly you can convert the asset into the cash. Okay, that is the measurement of the liquidity. And the correct answer of this, what? That is obviously the current ratio and the liquid ratio. And when we talk about the current ratio, you can understand the formula of the current ratio, that is current asset and it is divided by the current liability. And when we talk about the formula of the quick ratio, then it will be the quick asset and it is divided by the current liabilities. Okay, so the two basic measures of the liquidity, that is the current ratio and the quick ratio, that actually just measures for the company that how quickly an asset just convert into the cash, or which type of the asset is going to be converted into cash quickly. Okay, so that ratio is, it actually explains the liquidity. Okay, I'm hoping that everyone just understood this, right? Now the next question, the capital of the firm that is given, liabilities are given, and if the losses are this, so the total asset would be what, that we have to find out. When we talk about the capital is given, okay, and the liabilities are given and the losses are given, you only have to understand whenever we're talking about the term that is the capital are given, so just write this. Okay, and losses are given, that is 1,50,000 rupees. So always have to consider then what will be the net capital, then you will say then it would be the 6 lakh minus 1,50,000 rupees. And if I have to just calculate this, then it would become the 4,50,000 rupees. Okay, I'm hoping that everyone just understood this. Now, after that, you having the net capital, right? Now we have to find out the total asset. Whenever we're talking about the total asset, you have to just understand our accounting equation what says, a balance sheet equation what says, that is total asset is equal to total liabilities plus equity, shareholders funds. Okay, and you can understand as a, like, if I just just write here that is net capital, or you can also say that it is just a total capital. Okay, so what is the total capital that is remaining at the closing of the like at the time of the closing the period. Okay, so you can understand that total asset, total liability plus total capital, right? So now if I have to find out the total asset, then you can understand the total liabilities that is given the 2 lakh rupees plus the net capital or total capital that is given the 4,50,000 rupees. So what would be the answer of this? That would be the 6,50,000 rupees. And the same question, like the based on the same, like only the datas are different. The same type of the question is actually asked in the previous year's questions. Okay, so you have to understand when you're talking about the capital is given, and if there is instead of the losses there is given the gain, so what you have to do, you have to just add in the capital. Okay, so this is how we actually just going to solve the questions, right? I'm hoping that everyone just understood this, right? Next question. Sales are given. Okay, sales returns are given, cost of goods sold are given, and we have to find out the gross profit ratio. The very first thing that you have to understand, what is the formula for the gross profit ratio. And the one question then definitely would be just asked in the examination, that from the gross profit and the gross profit ratio, just understand like in a very proper way. When we talk about the gross profit ratio, it is just about the gross profit and it is divided by the net sales and multiply. You can just multiply for getting the term into the percentage. Either you can just write the 100 or just write by in the ratio only. Okay, so whenever we're talking about the gross profit ratio, then you can understand it is about the gross profit and it is divided by the net sales, right? Now the thing is that we have a data for the net sales, but how to find out the gross profit? And you can just understand when we're talking about the gross profit, that what is the formula for the gross profit, that is net sales minus cost of goods sold. Now, the gross profit, if I have to find out the what would be the net sales, there is some sales just occur, just there is some sales actually just occur in the business, and after that some products actually returned by the buyers. Okay, so you can understand there is a sales actually done for the 5 lakh rupees, but sales returns are of the 50,000. That means the net sales that actually would be equal to the 4,50,000 rupees. After that, minus cost of goods sold, that is given the 3 lakh rupees, just right here, that is 3 lakh rupees. So now what would be the gross profit value? Then it would become the 1,50,000 rupees. That would be your gross profit value. Okay, now you actually determine the gross profit. Now what you have to do, you have to just put this value into this formula. Now what you will do, that the gross profit value that actually given the 1,50,000, just right here, and the net sales that is your 4,50,000, just right here, and it would be multiplied with the 100, right? So now what we have to do, now you have to just calculate. So this will become the 100 by 3, that means 33.33%. The correct answer of this, that would be the A. So this is how we actually have to solve the questions in the examination, right? Now I think everyone just understood this. Okay, next question. A company's current ratio is given, current liabilities are given, inventory is given, prepaid expenses are given, and liquid ratio, that is the question. So whenever we are talking about the liquid ratio, you have to understand the question is about the quick ratio. So now, when we talk about the quick ratio, you have to understand, look, when we talk about the liquid, then you have to understand the quick. Whenever we're talking about the liquidity, then it is a different, okay, right? So this, I think everyone have to understand. So a company's current ratio, that is given the 2 is to 2.8 is to 1. Just remember the very important thing. Sometimes most of our colleagues just confuse between this, like in this ratio. You have to understand why I've just taken these data. You have to just know that because these type of the questions is actually asked in the examination, and during the exam time you may confuse in the digits, like. So when you're talking about the current ratio is given the 2.8 is to 1, just write in this way. Okay, now we know that the current ratio formula, that is current asset and it is divided by the current liability, that would be equal to the 2.8 divided by the 1, or is to 1. Okay, now the current liabilities values are given 2 lakh. Okay, so how to let what will be the value of the current asset? So 2.8 multiplied with the 2 lakh, what would be the value? That would be 5 lakh 60,000, right? I think it is correct. Okay, now again a very important thing that you have to understand, the current asset data I have, and I have to find out the quick ratio. That means I just required the quick asset, not the current asset, but I have the data for the current asset. No, the inventory is given the 1,50,000 and the prepaid expenses are given the 10,000. So how to find out this? So now you will just say that quick asset, that would be equal to how, what would the value here? That is current asset minus this is value 1,50,000 and the 10,000. Then what would be the value here? Then what would the value of this, like the your current asset minus 1,50,000 plus 10,000. Okay, and the current asset, that is your 5,60,000, just right here, minus 1,60,000, just right here. So the value of the quick asset, that would become the 4 lakh rupees. Okay, right? Now we having that, we actually determine, we actually calculate the value of the quick asset. So what is the value of the quick asset? That is a 4 lakh. And what is the value of the current liability? That is the 2 lakh rupees. So just right here, that 2 lakh rupees. So now just tell me what is the answer of this question. Then the answer, that would be the 2 is to 1. Okay, so this is how we actually solve. I think everyone just enjoyed this session. So hit the like button if you're liking our effort, liking our content. Okay, and do not forget to enroll in our selection batches, because you are going to get the fresh content there. Okay, and as well as you are going to get the like the live classes in the bilingual as well as the English medium batches. So this actually depends on you which batch is you are going to take. The only thing that you have to know, that you only have to use the code BUY422, because you just do not need to pay the full amount. You have to use the code BUY422. With this code you are going to get the big discount on the batches. Okay, as well as you can also just purchase the test packs, because it actually gives a final test to preparation. By mock test you actually just appear like in the examination. Okay, so just and you can also get the 22% discount on that. So you only have to use the code Y422. Okay, so that's all for this session. Thank you everyone for joining me in this session. Now we will meet on the tomorrow at the same time. Just do not forget to join me there. Okay, so from tomorrow onwards we are just going to start a new series of our this MCQs. Okay, so just join me on the 7th. Just join me at the 7 a.m. regularly. Okay, so thank you everyone for joining me in this session. Do not forget to hit the like button.